What's up, everybody? Welcome back to the channel. So I was just doing some research. I was looking up funds that I thought that maybe could potentially be something I could invest in, because right now the market's selling off. The Nasdaq's down a lot. S&P 500 has been selling off. And I stumbled upon this growth index fund, which is part of Fidelity. They offer it. And I'm going to go over it. It's something that I think I'm going to start adding some of my money to it every month and just hold it long term. This is a 20-year investment, just looking forward. But as I was stumbling across, I'm going to give you why I think it's a good fund to maybe consider. And if you like what I have, hit the like button, subscribe, and I always try to find like the next best deal. Because what I've been trying to do is I've been trying to find a fund that I can compare that might be worth trying to beat the S&P 500, which is right here. And this is the number one index fund I have, which is the S&P 500, is FXAIX. And I am just been trying to find something that maybe I can diversify, but more importantly, invest in these companies that you see here: Apple, Microsoft, Amazon, Google, Tesla, and try to get a more concentrated position. So when the big caps go up, the big guys, I'm going to make even more gains. And when they sell off, I'm going to lose more money. So I want to take that risk. I have a 30-year horizon. I want to try to make as much money as I can. And that's why I believe, looking at this growth mutual fund, I think it's worth considering. And we'll compare both and we'll see what the difference is. So right now you can see in the S&P 500, 29% goes into these 10 companies. And these are the big dogs. I'm sure you've heard of Apple before, and Microsoft and Amazon. I'm sure you've used it. Google every single day, Tesla and Facebook and Nvidia. Now, if you look at the growth index that I've been looking at, this one, FSPGX, look at the top 10 holdings. Very, very similar. Apple, Microsoft, Amazon, Tesla, Facebook, Google, Nvidia, Visa credit card, and Home Depot makes up 47%. So when the big caps start to move up and we get out of this, sell-off that we've been having for 2022, this could really offer some potential gains for us, because if the big guys move, then the whole market's going to move. So just to compare it right away, I like this right away because when I am going to invest in an index fund, I don't want to pay big fees. And when I look at the S&P 500, I see that this has a 0.015. So that just means that you're going to pay 15 cents per every $1,000 you have invested. So I like this large cap growth index fund because you're paying 35 cents for every $1,000 you have invested. So for me, that is worth having this concentrated portfolio of Apple and all the big guys. Almost 50% of the portfolio is invested in them, which is nice. And you're not paying much every year. And in addition to that, you are getting dividends. Now, I was looking around before I did this, and I'm not 100% sure what the dividend is per year, but you are going to receive dividends. As you can see, they are right here. It looks like you get them every 6 months, because if you look in 2020 and 2021, it looks like you're getting either 0.036 or 0.12, so 12 cents, I guess, per share. So 12 cents per share you'll get, and you just reinvest it into the company, obviously. And then you have capital gains history is what they pay you as well, which looks like, I think it's once a year. Because if you look here, maybe once or twice a year, 2019, 2020, and then 2021. And what is really good about this type of investment is you don't need $2,500 to invest. Some of these funds that Fidelity offers, you have to have a certain amount, minimum required investment. For this, you can see there's nothing to be, and you can just invest $1 and start from there. And then looking at the price history, you can see where it has actually gone over the last couple of months. And it's easier to see it on a chart, so I'll just bring it up on a graph. So this right here, I guess the large growth, is us, and it was trading up around here, and it's sold off a little bit. But the NAV is the average price, so $24 a share. And just looking at the year to date, because it's so concentrated in like Apple and Microsoft and Amazon, it's down almost 17% on the year. So that is only in the last 3 months, it's down almost 18%. And to me, That's when I want to buy things. I want to buy things when they're red and not when they're green. So if I start dollar cost averaging into this now, hopefully over the life of the fund, I can make a good percentage gain. So since this fund was created, it looks like when I go back even 5 years, the max we get is from 2018, 2017. So they created this fund around that time. And now that I'm looking at it, the purple is this growth index fund. And growth index are supposed to be volatile. So when you invest in these kind of, mutual funds, you really need to go in with the idea that you're dollar cost averaging. You're not putting all of your money in at once. You're dollar cost averaging and you're holding it for years because you want to give it time to grow. And that's why they're more riskier, because you're in a very concentrated position, like 50% in 10 companies. And now, moving forward, looking at the performance and the risk, it just compares it to the Russell, and it compares it to the large cap, which would be like, I guess, S&P 500. And it looks pretty even to me. But I like the life of it. The life is good. Like, it said like 19% a year. Moving forward, let's look for something more specific here. I'm going to go to the ratings. So Fidelity has rated them 5 years. It's at least made out of 1,000. Personally, I don't know what any of that means. So I just brought it up just because it shows it. But let's go over composition. What are you actually investing in? So information technology. So anything technology is 46% of the company. And that's your Amazon, that's your Tesla, all that fun stuff. Consumer discretionary, 17%. And then communications, 11%. And then the rest is done. But here you can see that it's growth and it's in large caps. That's with the LG. So that just means that the companies have a market value greater than 10 billion. So you're investing with the big dogs. And this kind of makes it a nice little picture for you to see with the top 10 holdings for more, I guess, familiarity pretty much. And you're invested 100% into the United States, which I like. That's where I want my money to be. I want it to be in the US, and that's pretty much where your money's going to grow over time. We went over the fees and distributions, 35 cents per 1,000. And then let's just take a quick look at commentary. I don't know what this is. So when you're comparing this, you can compare this fund. And I was talking about the S&P 500. So you type in both over here, you can compare them and you can look at a chart. So this fund, FSPGX, was only created in mid-2016. And this blue line right here is the S&P 500, which is FXAIX. Now I have shares of FXAIX. That's my main retirement holding. That is, I made a video on it. You can refer to it. I'll try to put it as a thumbnail so you can see it. This is the single best investment I believe you can do. But I want to put money into this growth fund because I want to see if I can buy the dip on this year in 2022. And if we get a nice little bull run in the future, my growth fund is going to grow much faster than the S&P 500 because it's concentrated only in the big companies. And when you compare them, you can see that the averages are basically the same. The expenses are low. And that's it. And I like the way that it grows. It literally is identical to the S&P 500. The only difference is the S&P 500 has been around for 100 years, and this mutual fund has only been around for 6 years. So I just wanted to bring this up. I think this is a cool little feature. I'm really happy that I found this. I'm definitely going to start adding to them. I'm going to add tomorrow to them. Just throw a couple bucks in just so it's there, and then I know to kind of keep adding to them as time goes. But you're looking at the 12-month, the low, the high was $22 up to $30. So we're buying it around 24. So I like that. I feel like I'm getting a deal as it is. It's already down 18% on the year. And then you just kind of contribute as you go, because when you look at the overall market, it looks pretty doom and gloomy right now, and everybody thinks the world's going to end. So you might as well throw your money in the bloodbath and try to keep like a long-term outlook on them. But I think this is one interesting ETF mutual fund that you could be looking into. That could potentially be something that you hold on for a very long time.